market expert Nishal Maheshwari joining us this morning. Mr. Maheshwari, good morning. Thank you so much for your time. First up, I think it's tough to look at these charts on a day-to-day basis and really try and make sense of which way the markets are headed. But looking at data in a more nuanced manner, are you able to form a trend line as to where are we headed? Are we likely to be range bound for as long as perhaps there is something earth-shattering that comes by way of the United States?
Hi, morning to you and your viewers. So I agree with you. I think 1st of November is the date basically where I think the market is now sort of pivoting towards, because that's a day Donald Trump has said basically they will be implementing 100% tariffs on China. And we have started seeing some amount of retaliation. I think today there has been some investigations against US shipbuilding companies by China. So I'm saying this tit for tat continues, and that's why the market is jittery. That's why we saw yesterday sell-off happening. And till this tariff issue and the trade issue gets settled broadly between US and China, I think markets are going to be in a sideways moment.
Okay, but this dependence on global capital, and we are seeing that every time there's a selling spree, we don't have as much buying action even at good valuations from the retail investors. Some argue that perhaps it is because of the retail investor buying that markets have not fallen as much as they potentially could have. But I want to understand purely from a retail investor sentiment and investment strategy perspective, are valuations okay right now? Is this a good time to invest in markets and stay invested and hope that, these 3 years, additional 3.5 years of Trump's presidency are eventually going to fade out, and India is a good and a happy spot to be in for the long term, given all that we are seeing in terms of macros coming from our own domestic economy?
So I'll just put it in maybe a short term, medium term, and a long term.
Okay.
I would say basically in the longer term, obviously India is a great place to be. I'm saying on an average, if I look at it in the 3 to 5 year kind of a horizon, I think you can easily say 6% kind of a GDP growth, and a nominal growth of something like 9 to 10%. I'm just assuming a 3 to 4% kind of an inflation.
Yeah.
So I think a 10% kind of a nominal growth, most companies would be achieving a 12 to 15% kind of growth. So I'm saying a market also, hopefully that all leads to same kind of earnings growth. So on a 3 to 5 year basis, yes, a great place to be in. On a medium term basis also, I think as soon as we get out of this issue of earnings issue, I think the current year will continue to remain sideways, basically, as far as earnings is concerned.
Okay.
So outlook for the next year seems to be much better. And that's why, because you are coming from a lower base of 26, and 27 obviously will be a better year. So I think on a medium term basis, you should be okay.
Okay.
It is a short term basically where you have got issues. I think there is going to be a further earnings cut happening for FY26.
Right.
Given that 2 quarters have been disappointment. So that's where I think the issue remains to be, and that's why you don't see market moving beyond anything.
Right.
Now, retail investors, I think in the short term, the pain has only exacerbated, given that last 1 year returns have been negative now.
Correct. So in the short term, what should they do? Just stay invested, not look at their portfolio, not look at the numbers every day, and just hope that the short term will pass and the medium term will arrive?
So I think the advisors have guided them well, basically, because equities is not a short-term investment at all.
Right.
If you want a linear kind of a return, basically, you should be in FDs or something like that. Equities is always basically lumpy. You'll have very good 3 years, what we had in the last 3 years.
Yeah.
And then you have 1 year basically, which will be flat or negative. So that's the way basically equities have behaved in the last 50 years. It will continue to behave that way, because this is a business and this is not a fixed income product. So people should be patient with this. But eventually you will find that a 15%, 12 to 15% kind of a return over long term, CAGR I'm saying, you will, but that may not happen every year, is what we have to be cognizant of.
Right. Any change in asset allocation at this point, given that the massive surge that we've seen in gold prices and the general rule being that, just park no more than 10 to 15% of your money in gold? Given that you're saying the short term is going to be sideways, the medium term could spring up slightly better numbers. Is this a good time to make a slightly bigger allocation towards gold, or too late, that bus has already left the station?
I think it is too late now, basically, because the market in both gold and silver are very, very frothy, and it's become more of a trading thing rather than an investment thing at the moment. So I would avoid investing in gold and silver at the moment.
All right. Talk to us about sectors. You said the long-term story, obviously, for India is great, given all that we are seeing domestically, and the momentum in the economy is fairly strong. So, are there specific sectors that you think are going to deliver much better growth compared to their peers over, let's say, the next 3 to 5 years?
Definitely. I think what we need to focus is basically the sectors which the government is also focusing on. So you
Okay.
see solar doing very well in the last 5 years, defense doing very well in the last 3, 4, 5 years. And the continuous focus on these two sectors continues to be there. There is amount of policy changes, government support. Another one which is getting added is now semiconductors.
All
So
right.
these are 3 or 4 sectors basically where the government is very focused, given the long-term and strategic nature of all the 3 sectors. And then you have to look at what is the ancillary sectors which will also get positively impacted by this.
Okay.
So when you say semiconductors, power is definitely a sector basically which will get positively impacted by this, because semiconductors by nature require huge amount of power. So that's a way basically one should go about it. But these 3 sectors, along with power and banking to extent in the shorter term, I think these are the 4, 5 sectors one should be investing in the next 3 to 5 kind of years, basically.
Okay, let's talk also about the banking sector for just a bit, and I will in fact also come to the IT sector and get your views on that. But on the banking sector front, given that we've seen fantastic inflation data, come in just 2 days back, and we are now looking at the lowest inflation since what, 2017 or something. Is there now merit for RBI to really hammer down interest rates and really cut it, slash it, maybe more than 1% or so, and really push for some sort of uptick in capital investments? Because that is something which is going to have a much bigger multiplier effect than keeping rates high at this time.
So we have to be cognizant basically that the rupee is also depreciating, and that will create a big problem. And that's why you saw in the current last policy, basically, even though the inflation was low, RBI has not gone in for a further cut. And the reason being basically that rupee is depreciating against the international currencies. And if you cut interest rate further, basically you will have further pressure on the rupee. So I don't think so RBI is going to cut in a hurry now. They have already front-loaded it very well. We have yet to see the transmission of that interest rate cut itself, 100 basis point, which RBI has done. I think that itself is enough basically for jump-starting the economy.
Okay.
So no need for further cuts, I think, basically. But I'm sure there will be a cut or two in the remaining part of the year.
Okay, but if the rupee does get weaker, sir, does it really matter much? I mean, at the end of the day, we want to push our exports, right? So won't exports become lucrative if the rupee depreciates?
But then you are actually going to be having a problem on your foreign reserves. The second thing remains to be basically when you start importing at a higher price, you import inflation from abroad. So I think that is going to be a major issue. And you do not want your currency to depreciate beyond a particular point. 3 to 5% is what RBI, I think, is comfortable with.
Yeah.
And they wouldn't allow beyond that.
All right. I also want to spend a minute with you on India's IT stocks, and IT stocks, especially the ones that pack the Nifty 50, the constituents of the Nifty 50. So this has been a pretty much a horror story over the last 1 year or so. In fact, ever since Donald Trump has come to power, and even before that, when we did have inflation skyrocket in the US, plus the disruptions caused by AI, India's sort of, blue chip, bellwether IT sector companies just don't seem to be able to getting out of the woods as yet. What do you make of the medium to the long-term story of these, big 5, big 6 Indian IT firms for investors?
So I think the bigger problem which you have highlighted is the AI. So there is a structural and a fundamental change which is happening, and I think the market and the companies have yet to get their arms around this. What kind of cuts? What kind of impact? How much of this business basically, which and India is largely, as you are aware, basically largely services in services country. So what kind of impact AI is going to have on the basic services itself? I think that is not defined as yet, and how it will impact the business. So I'm more worried about this than anything else, except about that H1B and Trump effect and all. I don't think so. That is much of a issue.
Right.
I think market is grappling with the AI and the fundamental change which will happen in the IT sector,
All
and
right.
that's why you're not seeing any bottoming happening in a hurry as far as IT is concerned.
All right, Mr. Maheshwari, we will leave it at that this morning. Thank you so much for your time, and a pleasure as always having
Thank
you
you.
here
Thanks
on
a lot.
News 9.